if one is an investor and it has invested into a sound corporation, a well-established company, okay, one must consider the fundamentals of the company, okay? If you invested into a company, like, I don't want to say any company because I don't want to make you think that if I say a company, then you're going to go out and try to buy stocks for that company. But, I don't want to say a company because I haven't read any of their financial statements to provide a good example. So I don't want you to go off of my example by saying a real company, but I'm just going to say XYZ, okay? If you buy XYZ, right, at the price of, say, 111 per share, that's how much the stock price is. The stock market price of XYZ is at $111. So if you were to buy stocks for that company, it'll cost you $111 per share, okay? So suppose you buy it at that price, right? And you viewed the fundamentals of that company, XYZ, and it gave you reassurance, knowing what they've made, knowing the data, okay, that they've made in their previous years showed promising results in the past previous years, okay, and they stood strong financially in their current assets, in their working capital, okay? They were not in debt, okay? But a recession came, something happened, it affected the entire market, a world event occurred or something, and it brought the price down from 110 to 36. It's so cheap. You bought it at $111, but now it fell to $36. 36. That's a $70 loss. Okay? $70 you lost if you own one share. If you own like 34 shares, that's like a lot more money you lost. But if it's a $70 loss, okay? Per share. $70 loss per share. Okay, if you had 2 shares, it'd be a $140 loss. So just want to put that out there. If you got, more than that, it's way more than that. You know what I mean? So if it dropped down from 111 to 36, the investor would question and scrutinize the fact of what he saw before, of the data, of the fundamentals of the company. He would scrutinize and be like, let me take a second look, okay? So once you scrutinize and take a look at the fundamentals of the company again, it will provide you security, knowing that the price drop should not affect the investor, okay? But instead should have the courage, one should have the courage to use their funds, use their cash to buy at bargain prices, okay? So it's you when you're an investor, you need to find sound companies that have strong financial grounds, that have a financial strength. You know what I mean? Never look at a company's stock price to see if the company is good or not. A company's stock price does not tell you if a company is good or not. Take a look at Berkshire Hathaway. You know what the company's stock price is? For Berkshire Hathaway Class A is over $300,000. 300,000. So that means if I wanted to own one share for Berkshire Hathaway Class A, it would cost 300. It would cost me, this guy right here, and you, and anyone else who wants to buy it today, 2018, this time, it would cost us $300,000 to buy Berkshire Hathaway. I don't know how many people. I do not know how many people want to buy that, but there are people who will buy it. Actually, there, because people do give quotes on stocks. People do buy, no matter what the price is. Okay, so their Class B, on the other hand, is 197. You know what I mean? So like, don't let the stock price allow you to determine if the company is good or not. The stock price has no record of the company. The stock price is no record of the stock price is merely the stock market price. If it increases, obviously there's different factors for a company's stock price to increase. Is A, because of its popularity. A lot of people like the company and are buying so many shares. And because people are buying so many shares, the price is just going up and up and up. The stock price is going up and up and up. That's one factor. Two factors. And C, because the company's strength is very strong, which is leading their price higher and higher and higher, little by little, you know. Or the media can affect its price, heading back to popularity, letting everyone know that, oh, this is the hell's that noise, you know? So stock prices, if you take a look, if you go on Google and look up all these companies, see all these companies' stock prices, do not let it influence you to buy it, because a stock price tells you nothing. It literally tells you nothing. You must focus solely on fundamentals and data, and do not let any other thing influence you. Forget everything. Forget all the other crap. The media, the news, the newspapers. Forget everything else. Simply have fundamental and data of the company in your mind. Let that be your, you know, when you're playing a game and you got your shield over you and nothing can affect you, no matter what happens, you're shooting everything, but you got your field on you, and whatever comes at you can't damage you. Let the data and the fundamentals be your shield, okay, during anything that happens to the stock price, whether it goes up or down or up, okay? But just know that there is a time, both down and up, when you should do something, okay? When you should do something, okay? Depending on the investor, depending on the brilliance of an investor, one will do something. Depending on the brilliance of an investor, one will do something, whether the price goes up or whether the price goes down. One can do something two ways, you know? So, it's according to the knowledge you have. One must understand the history of a company. One must understand the product a company sells. One must understand the treatment of a company's service to its customers. You know, and one must understand the employees of the business, you know, along with the annual reports. You know, you've got to know these things. You have to know what they're doing, you know, how things are running, what they're selling, how much they're earning, you know, what their working capital is. You know, you got to understand. There's a lot of ratios, man. There's a lot of ratios to factor. There's a lot of ratios to compute. There's a lot of formulas that blow my mind. Like today, I read of a new formula. You know, I mean, I didn't even know about it. I've been calculating all these things, and then I come across a new formula. I'm like, this is like, what the, like, how come this wasn't in the book? You know what I mean? Like, this is so valuable, and it's like, you know what I mean? So it's like, that's like my reaction. It's just my reaction. So, so it's like, And it just blows my mind, man. It blows my mind. Man, investing is crazy. It's all on what you know and how you use what you know. Okay? Let what you know be your guidance and your shield. It's got to be your shield. Your shield. Your barrier, your protector. Let the information be your barrier. Don't let what people say break your barrier. Because let that barrier hold strong against what people say, against, against what's going to happen to you. So, I mean, it just blows my mind, man. It's like I want to just, fuck. It's crazy, man. I love, like, the thrill of buying, I mean, it's just crazy, man. Remember what I said in my other video, and remember what I said in my last few videos? I can't remember. But a lot of investors sell low and buy high. I mean, that's ridiculous. That's just ridiculous. It blows my mind how people do that. But that's the average investor, because they have no knowledge. They have no knowledge of what bargains mean. They have no knowledge of what bargains mean, when it comes to investing. But they know what a bargain is when they walk into a store. You know what I mean? That's what blows my mind. It's the same thing. It's the same thing. But no, investors would rather pay $250 a share rather than $10. You know what I mean? Like, you do the math.